Okay, cool. Let's talk about Grab. So what's going on with Grab right now? This headline, I actually woke up at 5:30 today. I couldn't get sleep last night. I barely got sleep like in the morning. I didn't go back to sleep. So I was just up early. And ironically, I was up early. And not only do I see Palantir at all-time highs, I see Grab up 9%. And I'm like, what? What's going on here? So apparently what's happening is Grab has a major competitor. And that competitor is in Indonesia. And the name of the competitor is called Gojek. Gojek is another ride-hailing app, but more importantly, and I think they have 30 million users, more importantly, they're an e-commerce app. And they compete with C Limited and TikTok Shop and Alibaba's e-commerce competitor back in Indonesia. So Gojek joined a GoTo Group. Like I think last year, the name is called GoTo Group. It's like a parent company that just took them under their wing, and the company's worth about like $6.2 billion or something. Their stock is down badly in Indonesia and the Indonesian public markets over the past couple of years, but this year their stock is up year to date. A rumor came out this morning, and I don't think it's just a rumor. I think there's a lot of juice behind it because I saw multiple news outlets report on this, which is that Grab is in talks to buy them. And that's a big deal because one of the biggest issues with Grab, unfortunately, is that if they're in the ride-hailing business and the deliveries business, their margins suffer, right? It took Uber like 15 years to be able to get free cash flow margins that would be incredible for the street to actually be able to invest in them and give them a premium. And it's not easy to get that because it's a tough business, right? Like you're making a couple cents every order, and so you have to have hundreds and hundreds of millions of orders to be actually able to make a ton of revenue. It's also really tough when one of your biggest markets in Southeast Asia, Indonesia, has this local homegrown product that is competing with you on price, and then the consumer wins because the consumer just says, okay, if I'm not going to use Uber, I'm going to use Lyft. If I'm not going to use Grab, I'll use Gojek. But then Grab doesn't get that business, and then Gojek doesn't really get that much business either because they had to cut the prices so deeply just to get you off of Grab. If Grab buys them up, I mean, this would be pretty exciting. This will be pretty exciting. JP says, amid GoTo confirmed they have no plans to merge. So that's what GoTo's supposed to say right now. GoTo's supposed to say that. Now, why is GoTo supposed to say that right now? Well, the reason GoTo's supposed to say that is because they are not supposed to do a merger because in Southeast Asia in particular, mergers are kind of frowned upon. You have to get a lot of political connections to be able to definitively make a meaningful merger. It's not easy to do it. And so from the articles I read, the source that they are very serious in discussion, and this type of reporting wouldn't happen off like some random rumor that got reported to Bloomberg. This type of reporting would only happen if the companies are in such serious discussions that it's a possibility. Now, do I think it's going to happen? My gut feeling says no. I think the regulators are going to make it hard to make it happen. However, we're going to go through some due diligence where in Southeast Asia, it is a little bit more possible than not to get the regulators on your side if you, quite frankly, if you have a little bit of money. So we'll talk more about Grab in a second. We got Palantir right here on CNBC. Let's see what they're saying, and then we'll get deeper into Grab.
AI-related products. In his letter to shareholders, Palantir CEO Alex Karp wrote, "We are still in the earliest stages, the beginning of the first act of a revolution that will play out over years and decades. We've been preparing for this moment diligently for more than 20 years." Jim, you referenced what you said was an exceptional conference call. The exceptional valuation here doesn't seem to preclude it going far higher, trading at more than 50 times the EBITDA, right?
Right.
I'm sorry, 100 times EBITDA of 26 estimates at this point.
This is a company that's measured by the
50 times
Rule of
sales.
40, and it came at Rule of 81, which shows you that the revenue growth and the gross margins are extraordinary. I think that the call itself talked a lot about what the key to Palantir's growth is, which is ontology, meaning it's a core concept within its platform designed to bridge the gap between raw data and actionable insights. So what they do is they do an amazing deep dive on everybody that they have, and they come back with what they should do. And the artificial intelligence here is the king. But what they've really done is kind of just said, look, we can make anybody much better. And the resistance is that you may be stupid. You may not understand. I mean, it's very caustic. Well, look, Karp is caustic. Shyam Sankar is actually he does a lot of defense work. He's brilliant. He's done a lot of good stuff. There's a lot of really important people on the calls talking about what they're doing, say, with the Special Operations Command, what they're doing with military, which I wish they would tell you more. But what's incredible is you bring them in and they claim that you pretty much, because of the way that they're set up, can do a dramatic overhaul of your company or dramatic overhaul of the government, and they're working with Doge. And I think that this is a central and existential attack, ultimately not mentioned in the call, on the companies that run our Defense Department. And I'm talking about here Lockheed, I'm talking about Northrop Grumman.
Right.
I would not want to be those companies after reading this. They should read this conference call because this company is coming for them.
Yeah. Well, it now has, I think, the largest market cap of any of those that service the defense industry, at least in a robust way. I mean, listen, the U.S. commercial business, which, of course, has been growing and has been a focus of investors for some time, up 64%, and growth is accelerating. That, of course, is something that investors always embrace and are willing to pay very high multiples for. I am looking at a very positive note from Morgan Stanley this morning. They had a $95 price target. They upgraded the stock, but 95 is already being surpassed. They were talking about it being 52 times their, enterprise value. That over sales for 26, and that's already surpassed as well.
Yeah, I mean, I think that, again, when they talk about ontology, I mean, you do have to read this with I read it with you.com, and I read it with ChatGPT. Now, they think the chat, obviously, they're well beyond chat. And I get that. And I didn't mean to be mad at you. I'm not mad at you. I'm just in awe of these guys. And I was trying to reference them. No, I apologize.
I know when you're mad at me.
No, but when I went through the call, and I read it several times, and I used to be upset when Alex Karp cursed. I don't even care anymore. That was wrong.
Thank you, Jim. Thank you for not caring that a grown man said the F word. Thank you, Jim. We appreciate it.
I just care because it was like he didn't need to. I really like him, and I really love this company. And by the way, the defense guy is just extraordinary. And they're going to change the government. And they're working hand in glove with Doge.
And they are. And
working hand in glove.
He discussed it. And we should take a listen to what Karp had to say about the efforts undertaken by Elon Musk and his Doge department.
We love disruption, and whatever's good for America will be good for Americans and very good for Palantir. And I think you got it exactly right. Disruption, in the end of the day, exposes things that aren't working. There'll be ups and downs. There's a revolution. Some people can get their heads cut off. It's like we're expecting to see really unexpected things and to win. Basically, that's what we're going to do. See unexpected things, report expected things, and win. And we're planning to do that, and we're pretty optimistic about the U.S. environment.
It's very powerful.
You made a big point about your call for 100, which we got.
Right, I got it.
Today, ICE goes to 120.
No, I said
go
50.
There too?
Yeah, absolutely. I said at 50 and was going to go to 100.
That was
and
a good call, Jim.
I need to step in right here. Jim did not seriously say at 50 it would go to 100. He said it the way Steve says it when I call him. Oh, we might as well take it to 100. So I just everyone needs to understand this guy has not been on the Palantir train. He's been saying it as a joke that it would go to 100. And now here we are. But, it's funny. It's funny. Mainstream media is recognizing it now. I guess we're getting to the point where Palantir is undeniable. And that's just what happens when Karp puts up these types of results.
I predicted yesterday when it was at 80.
We did the Mad Dash yesterday.
And that is just because I am in awe. Now, the only guy I'm not in contact with Karp. I do just think that Shyam Sankar is really talking about the way that the Defense Department has to be redone. When I think that Musk is talking about saving a lot of money. What he's really talking about is you bring an outfit like Palantir in, and they distill what's important, the ontology.
All right, so that's CNBC's coverage. I think we're going to get a lot more coverage. I don't have the Kathy Wood clip yet, but I believe she talked about Palantir this morning, so we'll listen to her in a bit after the bell. But yeah, Wall Street is definitely getting a bit more excited about Palantir. And then again, at 10:30, I believe we'll be talking to Dan Ives on Twitter Spaces. I'll be streaming it on YouTube, so we'll get some coverage from him on Palantir as well. Okay, going back to Grab. So the idea is the reason the stock is up right now is because I think investors are looking at the company and saying, okay, if they're going to buy their biggest competitor in Indonesia, and quite frankly, their biggest competitor in Southeast Asia outside of Sea Limited, then that's a big deal. They're going to, theoretically, the article I was reading today, and a lot of you guys from Singapore put in the chat that these are very credible news sources that are reporting this. So I don't think it's like some, random blog. This is like actually legit sources that are saying this is going to happen. They would pay $7 billion is what I read. That's a 20% premium to where Gojek is trading today. Grab is an $18 billion company. They have $6 billion in cash. Would they use all $6 billion in cash to be able to buy Gojek? Probably not. They would probably issue a ton of stock to be able to get that done. And overall, as a shareholder, what do I think of it? I think it's genius. I think it's like Uber buying Lyft and not having to worry about Lyft and all the issues. Like if Uber bought Lyft 10 years ago, how much bigger would Uber be today without having to worry about, Lyft undercutting? I mean, I take a Lyft sometimes if I can't take an Uber because it's just cheaper, right? And that's business that doesn't go to Uber. So now, granted, what the US regulators have allowed it maybe 10, 15 years ago, but now not today. Now today, there would be all this anti-competition arguments about how Lyft gives more choices, yada, yada. In Southeast Asia, what I was reading this morning is that if you are politically connected, which is another reason I like Grab, because Anthony Tan, his father, is very politically connected, even though he doesn't have a good relationship with his father anymore. His broader family is, for lack of a better word, kind of royalty in Singapore, if I'm not mischaracterizing it. And so he can get shit done. And in, Southeast Asia is not as meritocratic as the United States. In the United States, you can have an idea and you could, you turn that into a $200 billion company. In Southeast Asia, you kind of got to be in the right family, the right circles to make this stuff happen. So if anyone could convince the Indonesian and the Singapore governments to make this happen, I think it would be Grab and Anthony Tan. Here is what Gab Growth, which is an amazing account. I highly recommend following them. If you care about Grab, I'm putting their link in the chat right now. Definitely follow them because they do a lot of great analysis on this company. So Grab is the leading ride-hailing and food delivery platform in Southeast Asia. Its market share in ride-hailing outweighs the second largest Gojek, which is owned by GoTo Group, by 400%. GoTo is the result of a merger between Gojek and Tokopedia. Gojek is the second place in ride-hailing plus food delivery with an especially strong position in Indonesia, the largest country in Southeast Asia, which is why it's such an important market. Tokopedia is a small player in the e-commerce space, the fourth place behind SE, Alibaba, and TikTok Shop. Grab has had very strong 2 years of bottom line rapid profitability across all their metrics, free cash flow, EBITDA, etc. Ride hailing and food delivery have reached profitability, while financial services component could be profitable by 2026. I actually think that could be profitable by the end of 2025, at least on an adjusted EBITDA basis. But financial services is another big part of the company and a part of the thesis for why it's growing so well. Meanwhile, GoTo, which again owns Gojek, has struggled in recent years with the stock price down 77% from IPO and the business still far from profitability. Which is another reason this makes sense. I mean, if your stock's down 70% after a couple of years, investors are probably getting tired of it if they don't see any room for growth in one of the most competitive, margin-crushing businesses ever, which is ride-hailing and deliveries. It might make more sense for consolidation, which is why this talk seems like it's happening right now. Both companies have had on and off talks for years, targeting a combination that would reduce costs and competitive price pressure in the region. It appears that 2025 may be finally the year, and Gab says, I believe this has far-reaching consequences for the space, which will essentially allow Grab to become a pseudo-monopoly, really capturing a lot of market share long-term and making them a viable competitor against Sea Limited, which is one of the leaders when it comes to e-commerce in Southeast Asia. Most of this acquisition would be for the e-commerce space. Obviously, it would be very good for ride-hailing and deliveries because they would take out one of their biggest competitors. But in terms of e-commerce, Grab is nothing compared to SE. And if they could, start competing with them, now you're talking about a real race when it comes to market share and opportunity in Southeast Asia. So, to me, that's exciting. Now, it's hard to see the stock holding up. Like the stock's up 10% right now, 9.92%. I am a little skeptical the stock holds that because this is a rumor. And the only reason I think it's even holding it right now, and we'll see, Grab tends to dump at 9:30, so we'll see if it actually can hold. The only reason I think it's holding it is because the market thinks there's some real truth behind this acquisition. Otherwise, if it was a stupid rumor, I don't think it would be getting this type of attention in the pre-markets. And so if it's not a rumor, if it's legit, and Grab gets to buy them out, will there be some short-term headwinds on the stock? Probably, because they're going to have to dish out $7 billion to make this happen. But I think investors will be like, holy crap. Like, everyone thought Grab could be a $100 billion company. Right now, they're at $18 billion. If they make this acquisition, if they pull it off from a political perspective as well, I think they're on the path to becoming a $100 billion company. And the market will get very excited. Last thing on Grab, and then we'll move on to earnings. We got 8 minutes until the market opens. HSBC upgraded Grab from a hold to a buy, but they lowered their price target from $5.50 to $5.45. I swear sometimes these analysts just want to look smart, and they think if they lower their price target by 5 cents, it'll give them more credibility because of their valuation models dictated that a 5-cent adjustment was needed. It's kind of insane. But I'm happy they at least raised it from a hold to a buy. Here's what they said. We think valuations have become attractive after the recent price correction, and we upgrade the stock to a buy. We continue to think Grab should be able to strengthen its leadership position in key categories like ride-hailing and deliveries due to its ability to continuously roll out innovative and affordable products. We expect Grab's on-demand GMV to grow at a robust pace of 14% CAGR over the next 2 years, led by growth in monthly transacting users and a higher frequency of transactions. We think the company's investment into various products will help to expand its total addressable market with more affordable solutions, and margins will improve with increased contribution from high-value offerings, scale, and advertising revenue. Thus, We expect Grab's adjusted EBITDA to rise 66%. This is exactly my estimation as well. I thought it would rise 65% going into 2025. So my number is exactly the same number they have, which is a $533 million adjusted EBITDA estimate, which would be massive because they already grew adjusted EBITDA 60% last year. So if they can grow it 60% over the next couple of years, that's where I see the stock getting to $10 by 2027. The stock trades currently at a 26 times 2025 EV to EBITDA multiple and 14.7 times 2026 EV to EBITDA multiple. Uber trades at 20, DoorDash trades at around 40. So you could see the free cash flow growth going much higher and the street willing to give it that premium, especially with all the cash they have on hand. Right now, they're trading at 30% cash because of that growth. That is now the inflection point of the Grab thesis and the Grab story. So I agree. That is a low multiple. For their growth, that is a low multiple. And if they can prove and execute on the growth thesis, this thing's getting upgraded much higher over the next coming years, and you're getting a lot of people that are very excited about the story. So, look, those are my thoughts on Grab. I think this rumor makes sense if there's truth behind it, and stock right here is surpassing $5 in the pre-market. Grab tends to have a great pre-market and a crappy opening market. So, I mean, we'll see if it can hold it. Volume is not massive on Grab. It only gets about 20 million shares traded a day. There's 4 billion outstanding. So realistically, I'm not expecting anything out of Grab until Q4. In Q4, if they drop some big daddy numbers like Alex Karp dropped last night, I think the stock's going to be re-rated. Until then, it's kind of just going to be up in the air. But Q4, February 19th, we will see how the story plays out. All right, so that's what we got on Grab. Let's go around the market. We had a ton of earnings that we got to talk about, and we'll get deeper into them. Spotify crushes it. They are up 7%. Why is Spotify up 7%? Because they increased their gross profit margins decisively by almost 30%. And what the biggest concern about Spotify was they wouldn't become profitable. They became very, very profitable. This stock was $77. It kind of pulled a Meta, to be honest. It was $77 in 2022. Now it's at almost $600. Meta was $88. Got to 700. So Spotify, incredible thesis. I got that thesis completely wrong. I kind of fell into the Netflix trap when it came to Spotify. And why is Spotify winning? Because they have a pseudo monopoly on music streaming. They don't really because of Apple and YouTube and Amazon, but they kind of do because people that use Spotify, they're not using anything else, right? And so when you got that type of user base, it's hard to see them not growing the way they're growing. Pfizer also had earnings. They beat on the top and the bottom line. They're up 1.3%. EPS 63 cents versus 46 cents. Revenue 17.76 billion versus 17.26 billion. So they beat. PayPal beat on the top and the bottom line. I don't know why the street is not excited about this. It's down 7%. If anyone has any logic to explain why PayPal is like this, let me know. They're buying back 15 billion of their stock. They announced this morning. I don't get how stock goes down 7% after they beat on the top and the bottom line, and they announce a 300% increase in the amount of share buybacks they're going to be doing. Instead of 5 billion, it's 15 billion. I don't know. I don't know what's wrong with the PayPal thesis right here. It's actually getting me kind of interested. I'm like, is the street being stupid here? Is this an opportunity or what's going on? But I'm imagining there's something in guidance that's really pissing off the street when it comes to either transaction margins or overall GMV. And that's probably causing some issues right now for PayPal. Pepsi, they beat on the top when it came to EPS, 196, or revenue. They missed 27.7 versus 27.8. They beat on the bottom, 196 versus 194. Pepsi right here is down 2.26%. Now, Celsius's earnings is really going to depend on Pepsi. Celsius is up about 0.5%. So we'll see how that plays out going into Celsius's earnings. But Pepsi right here is down a little bit as well. Oh, Spotify actually missed on EPS. Wow. They're still up. They missed 183 versus 206 on EPS, revenue 4.4 versus 4.3 billion. Their MAUs came in at 675 million users, which, by the way, reminds me, I need to make this show available on Spotify. I need to like put the, because I know some of you guys listen to the audio. So I will do that probably starting next week. We'll have a audio version of the show. And it'll be there for anyone who wants to listen to it as a podcast. But yeah, Spotify, even with the miss on EPS, when you're growing users at almost 20 million a quarter, I mean, the street's going to reward that. So that one is up about 7% here and now. And then finally, we had Merck, which is another pharmaceutical company. They beat on the top and the bottom line, 172 versus 168, 15.6 versus 15.5 billion. Their stock right now is down 10%. Looks like there's something in the guide. All right, so that's what we got on earnings. What do we have for the rest of the show? Well, we're obviously in 2 minutes going to open the markets with Palantir, hopefully maintaining $100. It's at $102.65 right now. So my gut feeling is I think we hold 100. I'm going to make that poll real quick in the chat to see if you guys think we can hit 100. Then throughout the rest of the show, we have Jolt's data at 10 a.m. That's going to be important. We have updates on the tariff war with Canada and Mexico. That is no longer a war. It's like, well, it was a pump fake, I guess. And it's pretty hilarious because on Sunday night, I said there's a 20% chance I think this is going to be a pump fake, 80% chance this is real. That number probably should have been flipped. 80% chance this is obviously a pump fake, and it was Trump negotiating. And then 20% it was real. It ended up being a pump fake. So Trump got a lot of concessions from Trudeau and the Mexican president. We'll talk about that later, but that's also pumping the broader markets. Now, NVIDIA caught a little bit of a bid last night, not really catching a bid right now. Well, it's up a little bit, 0.2%, 116.93. I bought a little bit more of NVIDIA last night, like 10 more shares. So I have 480 shares now. I have 20 shares left to round out my 500 share goal. And so we'll see if I buy that today or wait a little bit. But NVIDIA right here, at least holding 116, not at the lows of 113 that it was at yesterday. But Palantir will be the story today. Palantir will be the story today at $102 currently right now.